Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Monday, the 9th day of March 2015, and this is the daily report for gold and silver. We have lower pricing in both gold and silver, higher pricing in palladium, platinum trading lower on the day, first to gold off about 240, but it is trading absolutely near the lows, 1166.35. That is the print that we're currently seeing on the screen, low being 66.10, the high 1174.80. Silver also, as I said, trading lower, but it is off over a full percent as opposed to gold, which is only about a 0.25% lower on the day, trading off about 17 cents, 15.77 on the day. That is off of a low of 15.75 and a high of 15.95, and like gold is trading near the lows of the day. Side note, platinum off about $12 on the day at 11.45. There's absolutely no doubt we witnessed a tremendously volatile market last week, especially on Friday when we saw this dramatic fall in terms of gold pricing, in which once it was under $1,200 an ounce, we saw it literally fall apart, trading to a low, I believe, of about 1162, 1163. And in terms of what we're looking at on today's trading activity, we're negative on the day, but more importantly, take a look at this particular high right in here. And if you look to see that number itself, 1175, that is the 75% retracement of this entire rally right in here. And so we absolutely ran into some real resistance. We are now trading back on the lows of the day. And this is forming into the type of candle, I should say, is forming into a doji candle. And it's a specific type, time permitting, we'll go into it. But it's simply called a tombstone doji. And it's one in which you have the open and close, or the real body of the candle, which is typically the same price or a tick or two apart at the bottom, at the very bottom and low of the particular session. That being said, I believe that we're going to see continued pressure in gold, and the real distinct possibility that we could see a pretty major breakdown in the market. We talked about this a little bit on Friday, because as it approaches this area, this of course being the low that it is finding some support from, which is roughly at the 65 level right here, and it matches up of course with this most recent low. Market comes up from 1130, it trades to about 1235, and then comes back down. Here's that low at 1161, I believe, or right around that area. And lo and behold, market comes down. It does make a low below that, but as you can see, we're really right at that area, give or take a tick or two. My sense is that if we break below this, we're breaking through our first minor level of support. Our second minor level of support really comes here at 58. And a break below this is not minor anymore. It becomes a major break, because if we look at some of our more long-term charts, you can really see the triple bottom on a technical basis that we could actually see breached. And of course, this is the actual chart that I am talking about in terms of us taking a look at the technical reasons why a break below this particular level could be so critical. Now, first of all, we have broken below it at one time. This is 1130, but that was the only time really in history since this market has hit this record top here that we had a low that came quite to that area. But if we look at it more from a longer term perspective, we can absolutely see, aside from this one instance in which it did trade below it, we have a series of bottoms right here in the market, and this being the third time that it has really hit this bottom, because we can't count this aberration which goes below, but the third time it hit this bottom. In all of these occasions, we have seen a bounce off of the market, including this lower price. And so if in fact we find support and a bounce here, Where it will take us is something we would plot at a later point. We would look for something, but just as important is the fact that a break below this particular price point, and the other reason that it is on a technical basis so critically important, it's a major fib harmonic, meaning 61% retracement from this fib study here, and then we have, of course, a longer fib study that comes in, I believe, from about 400. Let's go ahead and kind of size that properly so we can get these candles in. But if you look at it, this comes in from about 400 up to the record top. So when you look at the two, 1157 here, 1168, you're talking about a roughly $11 range. When you're looking at $1,000 move plus in the market that we're taking these fib retracements from, it's basically the same price is what I'm trying to point out. The key is that we have broken below this one time prior to this, 1131. The market was able to move back up and sustain that. But here's really what I'm looking at. Think back to a period of time between, let's say, the middle of 2011, 2012. And if you notice, we have these series of bottoms here. The market in each instance came and rallied off these bottoms, 1, 2, and a rally off these bottoms. However, put this line out a little bit further. On the last occasion, once it did break, and the break is right here, it dramatically fell out of bed, and we saw that market move from, I remember these lows just as if they were yesterday, so to speak, but they were around 1535, and the market drops down to 1160, a dramatic fall. In the same way, my sense is, on a technical basis once again, like we saw on this particular time period in gold, if we see a really hard breach below that, we most certainly would go to the next level, or could go, I should say, to the next level, which is roughly about $1,000 per ounce. So that's why I want to be extremely sensitive to what happens here, because the way that this market begins to form in this area, whether it finds support or it breaks through and goes to new lows or threatens these lows at 1131, gives us scores of information in terms of where we can see this market going over the next couple of months. We are, I still believe, absolutely at a crossroads. Now, there's obviously other markets that we have to look at because they're absolutely influencing the price of gold. Most dramatically in terms of the price of gold that we need to follow is the dollar index. So traders, we're looking at a 2-day chart of the dollar index. The reason I put it to a 2-day is so that I could put more candles on a single chart. Today, the dollar was slightly lower. I would call it, in essence, almost unchanged on the day, this being a 2-day chart. This is that dramatic price move that we saw on Friday. And of course, when we look at a $30 decline in gold prices on Friday, roughly half of that was directly attributable to dollar strength. So this dollar is something that we absolutely want to keep our eye on. We got the FOMC meeting next week, and the key there is whether or not I believe they're going to use the word patience, because whether they take that out tells us that some sort of rate hike is imminent, maybe 2 or 3 FOMC meetings down the road, or if they continue to use that word patience, then it might be more of a protracted period. So the dollar index, we absolutely want to follow that. S&P's Dow Jones Industrial back in rally mode, at least for the day. Standard & Poor's right now trading a 2077.75. We can absolutely see we had a major decline on Friday, and it looks as though we've gotten roughly a little bit more than a third of that back, or possibly even a half of that back, probably a half. I think we were up about 160 points, and we were down on Friday almost 300. So about half of that has been regained, but we're going to see if we can find some support in this area at approximately 2060. As far as oil is concerned, it has been trading nominally lower today, really oscillating between the high 49s and the low 50s. It's currently at $50 per barrel. And lastly, I did want to take a look at silver. Actually, first, before we look at that, let me pull in another weekly chart in silver. This, of course, being our Japanese average chart. And it's absolutely clear that we continue to be under pressure as this market moves down. For the last 1, 2, 3, 4, 5, 6 trading weeks, we have had solid red candles, which simply means that the market opened below the midpoint of the prior week and closed below the midpoint of the prior week. That's what gives you a red candle in the Japanese average charts. We can see in terms of different levels of support, just as gold has got that critical area that we talked about, this 38% retracement area comes in at roughly 1581, and the market is just tracking right below that point right now. Also, when we look at the body size of this particular candle, it is at least average, if not greater than average, compared to these other body sizes. And that's the other thing that we look at, because what this gives us really is a sense for the strength of the current trend. We know that the current trend is down, but what is that strength? Is it waning? Is it increasing? Well, according to last week's, it's absolutely increasing. Lastly, when we look at this one candle, what you get is no wick. And the fact that there's no wick simply says that at no time during last week's trading did it even trade into the midpoint range of the prior week. And we can certainly see how that moves out into a standard candlestick chart. I've got a simple moving average. It's a 14-week moving average here. That would put you at 1668. Falls below that moving average. In terms of different levels of resistance and support, resistance is at around 1610. That is this particular line right. Sorry, I didn't have my pointer up, but that's, I believe, this particular line right here. And in terms of absolute resistance, support, major support at around 14, minor support is just at around 15 to 1510. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.